Live from New York, I'm Bonnie Quinn, and this is Bloomberg Markets. It is time now for Futures in Focus. Joining me now is Scott Bauer of Prosper Trading Academy. So Scott, we got that oil deal, quote unquote, the president already tweeting about more cuts. Nevertheless, we do have, close on 10 million barrels at least instantly. How come it didn't make more of a difference to the price of a barrel of oil?
Well, I think what it really comes down to, Bonnie, is this is more of a demand and not a supply issue, right? 3, 4, 5 weeks ago, we got hit with the double whammy, supply and demand, and now the world is really realizing that this is probably much more a demand issue than it is supply.
And at the same time, the spread between WTI and Brent is widening. We're at like $8 now. What is that reflecting?
It is, and this was down to almost even just a week or two ago, and it's really, in my estimation, the fact that the shale supply here in the U.S. still is we're pumping it out. We're pumping it out, and the demand here is just so weak where, you look at Brent and you look what's going on with OPEC and Russia and the production, excuse me, in the Middle East. And it's a lot different. They're drawing that down now. So now, to me, there's way much more of an oversupply for shale and for West Texas than there is for Brent. And that's where the big pressure is at.
Scott, if we got another 10 million barrels or anything else, although I'm not saying it will happen, I'm sure it would be a very protracted process. But if we did, would that make a difference?
It might make a slight difference right now, Bonnie. And if you look at the futures curve down, later in the year, you can see futures prices much higher. So there is a very steep curve. But for the near future, it is all really just based on demand. And I can't really see much changing over the next, let's call it 4 to 6 weeks.
Fascinating. Scott, does this set a precedent now? I mean, is OPEC a thing of the past?
No, I don't think it's a thing of the past. Listen, we're going to get through this. The world is going to get through this, hopefully much sooner rather than later. But realistically, it's going to be probably till the end of 2020 where things start to settle in to that sense of normalcy. And then let's hope that OPEC and OPEC Plus and the U.S. all get back together and supply and demand starts to even out a little bit. I mean, this really just becomes the basic economic principle of supply and demand.
Scott, there was the idea that it's an immediate sort of 9.6 or 7 barrel cut, but then there are smaller cuts throughout the rest of the year and into next year. If the economy doesn't rebound post-pandemic, assuming there is a post-pandemic era, sooner rather than later, will those cuts, be enough?
No, they absolutely will not be. No question about it. And that, again, really, really hinges on the fact that this is a demand issue. So it is a post-pandemic issue of what happens. And, again, the supply cuts we have right now will probably be okay 6 to 9 months from now if we are on the other side of this. If we're not on the other side of this, Bonnie, and demand stays at, 5 to 10% of what it normally is, then they could probably cut 20, 25% more, and it won't make a big difference.
Amazing. Scott, thank you so much for your time today. I know you're at home, as are all of you at Prosper Trading Academy. That is Scott Bauer of Prosper Trading Academy, and our thanks to him.